Ladies and gentlemen, gather around your wireless sets, for the markets have been ringing with the clatter of typewriters, the shuffle of ticker tape, and the excited chatter of every broker from Wall Street to Wellington Street. This week, the twin titans of digital coinage, Bitcoin and Ether, have not merely edged past old records, they've smashed through them like an express locomotive at full steam. Bitcoin, the old warhorse of the cryptographic battlefield, charged beyond its previous all-time high, spurred on by whispers that the Federal Reserve may soon loosen its grip on the nation's purse strings. Traders in their pinstripes and suspenders grinned like cats with cream, some claiming they'd not seen such exuberance since the first rumblings of gold-backed currency reform. Not to be outdone, Ether vaulted over $4,400, buoyed by a wave of institutional investments and rosy forecasts for its exchange-traded funds. The scent of speculation filled the air, and even the most world-weary of coin counters found themselves caught up in the fever. Next, from the bustling heart of Texas comes a curious partnership between the lightning-fast world of esports and the quirky charm of niche currency. GameSquare, a homegrown powerhouse in gaming and technology circles, has been named the agency of record for Animecoin, a token with a loyal following among anime and gaming fans worldwide. The aim is nothing short of a full-scale cultural offensive, sponsorships, in-game integrations, and fan events designed to make Animecoin as familiar to gamers as a joystick in hand. Yet, as the fanfare swells, market sages remind us that such novelty tokens can rise like a festival balloon, but may also deflate just as quickly when the wind changes. And now, from the well-carpeted drawing rooms of political and financial power, a headline that could fill the front page for a week. World Liberty Financial, a venture linked to the Trump family, has unveiled a staggering $1.5 billion coin deal. The venture's mission, they proclaim, is to broaden the reach of digital finance, offering access to tools and services for those often left outside the gates of high finance. The announcement was delivered with all the pomp of a victory rally, promises of democratizing opportunity tumbling forth like ration cards from a well-stocked drawer. Supporters hail it as a bold step toward financial inclusion. Critics, meanwhile, caution that the line between high ideals and high risks is often a fine one indeed. Speaking of grand debuts, let us turn our attention to a name currently dancing across the financial pages with all the grace of a Broadway headliner, Bullish. This newly public crypto exchange didn't just step onto the stage, it leapt. On its first day of trading, the stock rocketed up by a thunderous 84%, sending its market value into the billions before most investors had finished their morning coffee. The very next day, shares rose again by another 11%, pushing its worth toward the eye-watering sum of $11 billion. Adding to the spectacle, none other than Cathie Wood's ARK Invest made a public show of confidence, buying up shares like a canny housewife, snapping up bargains at the corner store before the shelves go bare. The mood surrounding Bullish is electric, with some daring to whisper it could become a flagship name in the digital asset era. Finally, the gavel has fallen on a saga that has cast a long shadow over the crypto industry. Doge Kwon, once the high-flying founder of Terraform Labs, has stood before a U.S. court and admitted guilt in one of the most staggering financial collapses in digital history. His Terra USD stablecoin, once touted as a safe harbor in the turbulent seas of crypto, imploded last year in a calamity that erased $40 billion in value almost overnight. Now, Kwon faces up to 12 years behind bars and has agreed to surrender more than $19 million in assets. Sentencing is set for December, and while the legal wheels turn slowly, for many observers the verdict is already etched in stone. The fall from grace was swift, the damage incalculable, and the lesson, a hard one for investors everywhere, will linger long after the ink dries on the court records. And there you have it, dear listeners. A week where fortunes soared like zeppelins in clear skies, and others plummeted like overburdened cargo ships in a storm. Keep your ledgers tidy, your rotary phones polished, and your ears tuned to this station, for in the whirlwind world of finance, the next headline is always just one telegram away.